Good morning and welcome. You have joined the PIM and PIA Mid-America Financial Executives Council on Sales Tax Nexus Compliance Solutions. My name is Teresa Campbell with PIA Mid-America, and I am doing the introductions on behalf of Steve Bonoff with PIM, who couldn't be with us today. Now, before we get started, I want to note that all of our attendees are in mute mode during the entire program, so that we can ensure a quality recording, which will be made available to all members following the program, as well as a PDF of the slides, Excel document, and so on. Questions during the program can be asked by typing them into the Q&A field at the bottom of your screen, and we will moderate those questions for our speakers. We might ask them to answer them if it's convenient at the time that they're on that slide, and general questions will be held till the end. Now, technical difficulties should be communicated in the chat field at the bottom, and the staff will work to get those issues addressed so that you can hear the program as we go. Note that the Financial Executives Council is a joint effort and has leaders from both regions that guide the program and the content, and that program is offered every other month. It really focuses around financial reporting and compliance, data management and security, and financial policies and planning. With that said, Elby Carlson, our co-chairs of the committee, and Rick Riesgraf is here today with us to welcome you and introduce our speakers. Rick, thanks for joining us.
Thanks, Teresa. Yeah, Mel Enger, who usually does this, had a conflict today, so he asked me to sit in and just make the introduction to this very robust discussion on sales tax in the printing industry. And we have a lot of participants today, so hopefully there's a lot of questions and a lot of back and forth. I just wanted to introduce our speakers, and then I'll turn it over to them to take the agenda forward. Matthew Schaeffer is going to speaker. He's from the Schaeffer law firm, its own firm. He specializes in sales use tax, Nexus, and matters related to that. He was co-counsel in the South Dakota versus Wayfair case that went all the way up to the Supreme Court and kind of changed our lives here in recent years. He has a lot of experience in the graphic arts industry, and we look forward to hearing what he has to say about this. And then Rob Yonkers. Rob is one of our lead business tax partners at L.B. Carlson, a CPA and consulting firm. Rob has handled a lot of sales tax matters for our clients and a lot in the printing industry as well. So both of our panelists have presented webinars to the industry on sales tax in the past, and they have represented clients both at the federal, state, and local level on these matters, so they're very qualified, and we're looking forward to hear what they have to say today. So with that, I turn it over to Matthew and Rob, and looking forward to a deeper dive into this topic.
Rick, thanks so much. So this is Matt Schaeffer. I appreciate the introduction. It was pretty thorough, so I won't say too much more about my background as we get going. Just to let you know that I've been a practicing attorney for about 27 years, and 25 of those have involved working on state and local tax matters, the last 20 of which focused on sales tax and on Nexus issues. Since the early 2000s, I've represented buyers of print, primarily retailers, catalog purchases. And then starting in around 2013, I expanded that practice to represent folks on the printing side and a wide range of different media and kind of industry placements, direct mail being one of the areas where I have spent a lot of my time. So I look forward to being able to talk to you about these issues, and I'm going to let Rob say a word or two about himself.
All right, thank you, Matthew. I am Rob Yonkers, and again, I will say Rick's introduction was pretty thorough. I've practiced also for about 27 years, and about the last 20 years, I've focused primarily on tax issues within our firm, sales tax, income tax. Our firm has a pretty strong presence in the printing industry. We have several clients there, so I've spent a lot of time working with a lot of our clients through different sales tax issues. Give you a little bit behind the scenes production. So I am also running the slideshow. So yeah, if there's any technical difficulties or something like that, bear with me as I'm doing double duty here. So with that, we'll move forward. What we're going to try to cover today, here are the items that we're going to try to cover. Matt and I are going to go back and forth on these. Matt tried to give me a softball here. He let me just cover the agenda, which is a good start just to flow into this. But Matt's going to talk about the current status of sales tax Nexus. I will be covering the thresholds for compliance and your company's obligation. Then we'll throw it back to Matt for the sales tax process. Back to me for communicating the law. And then Matt will cover a couple issues. And then I'm going to finish up with compliance for fulfillment operators. And then we'll have a question and answer session. I'm guessing there'll be quite a few of those. So with that, we'll move forward and let Matt get started.
Thanks very much, Rob. We're going to try to move through this information pretty briskly so that you have an opportunity to ask questions of Rob and me, because I think that'll be where we really get into the meat of the issues. We know that we're building on a prior program, so I'm going to go through sales and use tax basics quite quickly, just so that we all have a baseline for the discussion today. So as you probably understand, sales and use tax laws differ dramatically by state, and that will be, unfortunately, a recurring theme from time to time in this discussion, where it really does depend on a particular state's approach in order to understand what your obligations may be. And it does make multi-state compliance that much more challenging. So states can set those rules for themselves within constitutional limitations. And it used to be the case that there was a significant constitutional nexus limitation that required that there be a physical presence in the state for a company before the state could impose tax obligations upon that company. But as you, I think, all probably understand, that changed in July of 2018 with the Wayfair decision, a case, as Rick mentioned, where I served as co-counsel to the retailers. So I'm intimately familiar with the lead up and the fallout from that. As a result of that Wayfair decision, which I'll describe in more detail in a moment, you now have any company that may be subject to a state's jurisdiction based on economic factors as well as physical factors, subject to the following types of rules. Sales tax is generally due where a sale is, well, it is due where a sale is sourced, and that can include any local tax that may be associated with that jurisdiction. For tangible goods, including printed materials, sales and use tax applies where you deliver it. And then for services, sales and use tax often applies where the service is used, however you might determine that under the state's rules, or where the benefit of that service is received. So Rob, why don't we continue, and we'll, a little bit more about sales and use tax basics, right? Sales and use tax is levied on the purchaser ultimately. Essentially in every state, it's either directly on the purchaser or the seller has the right to get reimbursement, but the obligation to collect it falls on the retailer, the seller in a retail transaction. And when a retailer fails to collect, then the liability for that tax will actually shift to the retailer in addition to the purchaser. That's an important thing to understand when it comes time to evaluate your collection obligations. So South Dakota versus Wayfair changed the Nexus rules. The court on July 21st, 2018 overruled the physical presence requirement of constitutional nexus and instead instituted an economic presence theory. In fact, economic or virtual, but economic is the standard that really gives you some definition. The court didn't set any specific standards for states to follow in ruling that economic presence could be enough for a state to require an out-of-state company to collect and remit sales tax. But it did approve a South Dakota law which set thresholds at 100,000 in annual sales into the state or 200 transactions annually for delivery into that state. And as Rob will talk about, many states have followed that, others have somewhat different standards, and we'll speak more about that as we go along. Post Wayfair, all states that have a sales and use tax have now adopted an economic nexus law. That's 46 states when you include Alaska, which has local taxes that are now subject to an economic nexus principle, and the District of Columbia. The most recent state to adopt a standard was Missouri. Missouri's standard does not take effect until 2023, but every state now has a law regarding economic nexus. That group of 46 states and the District of Columbia encompass over 10,000 local jurisdictions. And while many of those are administered at the state level, hundreds are also home rule. And so you really need to understand that there's a local component to this that becomes particularly challenging for direct mailers because obviously mail goes to such a large number of jurisdictions on any particular transaction. So with that baseline, we'll move forward with more substance on where we are today.
All right, well, as Matthew touched on, Wayfair changed the landscape of how you guys need to worry about whether or not you have Nexus. And South Dakota was the baseline, which was set at the 200 transactions and $100,000 level. And I'm going to pull up in just a second and share with you a tool that we've developed here that has all the different state thresholds, and that's going to be something that will be provided to all the participants that they can certainly use. And we'll go through this in a little more detail when we look at it, because that will touch on a lot of these items right here on this slide. What are the thresholds? And it all does depend on the state. You'll see when we look at that. One important other thing to talk about before we move on that is a lot of times there's people wonder how is transaction defined, especially maybe if you're doing direct mail, if you're mailing, 100 pieces into a certain jurisdiction, are all of those separate pieces, a separate transaction? And typically the invoice is going to govern that. So if you have one job and on that job, there's 100 pieces that ship to a certain jurisdiction, that's one transaction. And the whatever the revenues associated with that would be the revenues that would be associated with that as well. And typically these thresholds are going to be measured on a calendar year basis. And it can be, the states have the option of having it being a rolling 12 months or a quarterly basis. With that, I'm going to bear with me again because I'm managing the slideshow. I'm going to pull up this spreadsheet so you guys can all see it. Hopefully, am I sharing that now? I just want to make sure. All right, good. So as you can see on here, and I'm hoping that all of that, we try to update this periodically. And we do have all of the states on here, and as well as the District of Columbia. I double checked and we only have 4 states that are not tax exempt. So I think we have all 46 on there that are supposed to be included. We also have notes over in the sides that hopefully will be helpful in some instances. You can see as Matthew said, Missouri adopted something, and we do show that becomes effective January 1st of 2023. Couple other interesting notes on here. Connecticut and New York, they have their rule is that you need to meet the transactional and dollar threshold to have economic nexus. And I'll just kind of show you, we've tried to develop the spreadsheet though, it's I guess interactive, meaning that if we look at Alaska, and if I had 200 transactions, it's going to tell us that we have economic nexus. So, and you can see on this spreadsheet, again, that we've got the dollar threshold on here. We've got the measurement date. Another important thing to consider is tax exempt sales. You can see as you scan down this, a lot of I shouldn't say a lot, but a fair number of the states will allow you to exclude tax exempt sales from your dollar threshold. So anyways, this is something that we will provide to you. And again, if you have questions on it after it's provided, we're happy to talk to you about that as well. Your company's obligations, obviously the spreadsheet that I just looked at is something that we try to use with our clients to help them determine what their obligations are. And what I mean that is, do they even have an issue of filing? And then we further then drive down to figure out what a potential liability might be. But as you're looking at your obligations, it's important to know that constitutional physical presence nexus that Matt talked about still exists. So if you have inventory on consignment somewhere, if you have a warehouse somewhere, if you have an employee somewhere that isn't covered by Public Law 86-272, which basically says that your salespeople, aren't going to necessarily create Nexus. Lots of other items can create physical presence Nexus. You just want to be aware of those because that can also create a sales tax obligation. You can use this tool and use it by year to go back and determine when you might have crossed the threshold that is going to require you to start registering and collecting and reporting your obligations in these various states. And the other important thing to talk about, and I'm guessing there may be questions on this later, but the tool here is to let you know if you've got an issue so that you can technically be in compliance if you want to. At the end of the day, you're going to need to make a business decision as to whether you're going to want to register and collect in all these jurisdictions, because as Matthew said, there could be up to 10,000 of them. So, and it's important to know that there are a lot of exemptions out there. And as we had on that spreadsheet, if you have exempt sales, those sales can be excluded when you're trying to determine if you actually have a filing obligation. So it's important to know in the various states what those exemptions are and take advantage of them when you're trying to determine if you have an obligation to file.
Rob, your tool for this is really a strong, piece of the puzzle for retailers or print industry folks to use to start. And I've, offered clients a similar kind of spreadsheet. I think we understand, right? And your point here is that you do need to look back. And I think looking back, you'll know when you may have triggered a threshold in a particular state. And I think you and I discussed in preparing that we could almost do an entire another seminar on how you would address your prior obligations in addition to your forward-going compliance. And we're happy to talk about both today. I think we're talking in some sense mostly about what do you do on a going forward basis? How do you meet your compliance obligations? If you have crossed a threshold in states in the past, there's another set of calculus that you need to do in order to determine what do I do about that potential past liability. And I think you probably have had, as I have had, clients who wrestle with that.
Yeah, no, agreed. Yeah, and I just pulled the spreadsheet up again, just so that, because you're right, that, all these effective dates on here would help you to be able to determine how far back you have to look to see what kind of issue you might have. Because if this is the effective date of it in Alaska, well, if we were over the threshold perhaps in 2018 and we don't have a customer there anymore when we get to 2020, then potentially we don't have an obligation. So,
right.
Can you make that bigger? It's hard to see.
oh yes, I'm sorry. Let's see. Can I make it bigger?
In that bottom right, there's that scroll bar. Yeah, that's awesome. Very good.
Sorry, I let's see. We can make it even. Is that better now? You can see that.
That's better.
Okay.
I just want the members online to be able to know what the tool does.
Yeah. Okay. Then I'll take a step back. Basically, again, we have all the states listed here, and hopefully everybody can see that this is Alaska. I'll actually, let's see. Maybe I can actually zoom a little bit more. We'll just go. This might make it too big, but we'll go across. But we've got Alaska. It's got the number, basically what the parameters are in that state. And this is meant to be interactive. And what I mean by that is if you put in your number of transactions in Alaska, it should tell you, yeah, you probably have an issue. So I'm no Excel wizard, so I didn't write this, but I do like the way that it works. So.
Those threshold dates, right? What you typically have to look back a year from the date that the state adopted, because many of them have it as being a current or prior calendar year measure. And there were states that were very early adopters in 2018 after Wayfair was decided. A couple that adopted standards that were effective almost immediately, July 1st, many more as of October 1st, 2018. So in theory, if there was a 2018 date and you were supposed to measure it based on current or prior calendar year, you might even go back to 2017. We've kind of recommended that you look back to 2018 for starters, so that you have a sense of where you may fall with regard to these thresholds. Other states were later in 2019. There were some in 2020, but there were many, many states that were on board by July 2019 at the outside. So 2018 sales is going to do a pretty good job of helping you to understand state by state your obligations. And you know, the question of what you do if you find out that in 2 or 3 states you crossed it, you know, as of December 31st, 2018. Again, we're happy to answer questions about it. There could be a whole nother program on issues like, do you think about pursuing a voluntary disclosure agreement with the state? Do you try to negotiate? Do you approach this as a question of, well, you know, how large is that exposure? What's what's my particular business's tolerance for risk? These are all business decisions that Rob and I would, you know, help you to try to make once you know where you stand on this kind of 50-state review, or fewer, depending on the states you sell into.
So Matthew, as we're talking about that obligation, there is a question regarding what the legal implications of failure to comply are. Is it like payroll taxes where failure to pay can be held against the owners and officers and responsible employees?
So generally, sales taxes are trust fund taxes, right? If you collect them, you are obligated to turn them over. You obviously have an obligation to meet those obligations on behalf of the state. But personal liability for owners or officers who have a responsibility for sales tax collection generally are only going to be imposed if you have done something very egregious. So it would be unlikely for there to be a state pursuing a personal obligation against a responsible individual until they'd exhausted the opportunities to pursue the company. You know, it is, if you fail to collect, the company has the obligation to pay that tax, you know, that your customers otherwise would have borne. But personal liability is pretty far down the road and pretty rare.
Okay.
All right. Well, and the reason I guess that we talk about the obligations here is because there is definitely a cost to becoming compliant, and I'm going to move on to the next slide, hopefully here, and Matthew can talk about the software and what the potential costs of compliance might be.
Thanks, Rob. You're right. So it is a complex operation to comply with sales tax on a multi-state basis because of the differing rules, differing rates, possibility of local jurisdictions, the different reporting, et cetera. So it is a complex undertaking. You want to use the kind of tool that Rob's presenting to understand just how many states you may have to tackle. If you're fortunate that you have a regional business where perhaps beyond your home state, you only have 1 or 2 states where you may need to become compliant, you might have other options beyond what I think eventually and fairly early in the process becomes an imperative, which is getting third-party support. The rules are so complex, and there are, especially since Wayfair, many businesses that offer software to try to help you with multi-state compliance. And so for a business of a certain scale, it's almost certainly going to be necessary unless you have, you know, teams and teams of internal folks who manage it. So there are lots of software options out there. My understanding is that for the EFI business management software, the one that is most readily compatible that I'm aware of is the Thomson Reuters OneSource product. I have had clients who use EFI in concert with Thomson Reuters. I've had other printers who have used Thomson Reuters, and I'm not making a plug for them. I just believe them to be, at the moment, more in tune with the print industry than some of the others. Avalara is probably the industry leader overall in sales tax compliance software. And it has a good product. But my understanding is perhaps not as well attuned to the print industry. There are many other providers. Vertex is one, Tax Cloud. There are many others that are out there as options. And what you really need to do is consider the suitability of the various alternatives to your business, which is going to be a function both of its compatibility with how you run your business, including your existing systems. And then the pricing model. Obviously, everyone is concerned about how much these things are going to cost, and there's an implementation process that will be potentially expensive. And then over time, of course, you have ongoing charges. You want to know how those are priced. If a software package prices per query to the software, and you are selling direct mail and you are making thousands and thousands of queries for local tax rates every time you print an order, those prices could run high very quickly. So you want to look at the pricing of the product, of course, as you try to understand what the good option will be for your business.
All right. Communicating the law to your customers. So this may seem like common sense, but let's just say that you've determined that you have an obligation and that you are going to be, you've decided that you're going to be technically in compliance and want to do everything by the law so that you're limiting your exposure, your liabilities. What do you do? Notify your customers of this change. And what I had an instance where this happened, and what I did is I understand from Teresa that we've got a few salespeople on the line. I actually talked to my client and said, we should probably get the salespeople that are going to be affected involved and educate them on the process, and then have a joint meeting. And this actually happened during COVID. So we had a joint Zoom meeting with the salespeople and then the customer to explain to them the change that was happening. The important thing to know and to understand is that this should not put anybody at a competitive disadvantage, because that was obviously the salesperson's concern when we first got on the phone was, okay, well, you're automatically hitting my customer with a 7% sales increase. And the reason why I say it shouldn't put anybody at a competitive disadvantage, and this is where the education comes in, is if you have a client that on their end is being compliant with the law and you weren't charging them sales tax and it was an item that was taxable, they should have been self-assessing themselves some use tax. Now, in the instance that I had, it was a fairly large customer who was being compliant. So at the end of the day, everybody was comfortable that it was just a different way for the sales tax to be paid, that now my client had the obligation to collect and remit the sales tax. And now the customer didn't need to self-assess the use tax. So also important to get yourself educated as well, because there may be exemption opportunities. Maybe you have that customer who isn't compliant and they do think it's going to be a real increase to them, although if they get caught by the authorities, it's not. But being able to provide them some, assistance by saying, hey, you've got an exemption certificate here available that's going to minimize any potential liability you've got here. I guess bottom line is just make sure that everybody within the business understands how this is going to affect the business, the customers, so that there aren't any surprises.
So it's more important now more than ever to make sure that organizations have their resale certificates on file and in order. If they don't, they're liable.
Well, yeah, I mean, I think that's always been important, because you could have always been liable, but I mean, they're yes. I mean, is it more important? It sometimes, and Matthew, you can speak to this as well, but I guess in my experience, it's dependent on the auditor too. I've had some auditors that have let me obtain exemption certificates for my clients after the fact. And I've had other clients that weren't necessarily going to let us do that. So I do think it's important to be aware of what they all are and get them up front. I mean,
I guess what I've tried to convey to some of my clients is when you have a new customer, part of the package should be sending them exemption certificates. And you should let them know that if you're doing business with them, that if they don't get you those exemption certificates back properly filled out, then you're going to need to charge them sales tax. Might be a little different situation with existing customers, but there should be a process where maybe every 2 or 3 years you go through and make sure you have all the proper exemption certificates.
And Rob, you used the example of a sales tax audit that's typically done by your home state. When that happens, are you required to only provide them documentation for sales tax in that state, or would they be asking about other states as well?
It should be just for your state. I mean, they shouldn't be asking about other states, although as we talked, we had a meeting yesterday to talk about this beforehand, and we did talk about that, who knows what might happen now that there's the ability to, that economic nexus exists. Maybe states will try to incentivize other states to let them know, hey, I was in auditing XYZ company, and yeah, they were compliant in my state, but it didn't seem like they were filing sales tax in any of your states. I mean, something like that could happen in the future, who knows? But yeah, to answer your question, I mean, they should be there to audit. I mean, if I'm in Minnesota, which is where I am, and my customer is in Minnesota, a Minnesota auditor should visit us to look for Minnesota tax. If my client also has Nexus in Illinois, then we very well could get a visit from an Illinois auditor looking for Illinois sales tax, and they shouldn't be looking for Minnesota sales tax.
But if you get the certificate from your out-of-state customer and it shows they're exempt, then that should protect you as the seller, correct?
It should, yes, as long as it's completed correctly.
So Teresa, this is a good question, and it flows into the next slide. And it's a good question for the following reason. So as Rob just pointed out, while the most likely state to audit you is your home state, once you're selling into multiple states, it's possible that you will get notification of audit from a state where you are delivering materials. And that could be because an auditor in another state visits your client, sees from whom they purchase products, and now has an audit lead, right, for another business. So you can be audited anywhere that you make deliveries, right? You may be less likely to be because of just the realities of how audit targets are identified. But talking about the exemption certificate issue, and we'll start with resale. And Rob, if you turn the slide over, we'll just move into this topic. The challenge with resale certificates, right, and all exemption certificates, is that not every state accepts the same proof for an exemption. So if you are selling to a business that is located in, pick a state, Wisconsin, and I'm picking this out of thin air rather than using a specific state legal example, and that company is asking you to deliver pieces into 5 other states, right, for resale. You may need that company to provide resale certificates that are going to be recognized by the revenue authority in each of the states where those resales occur. It is unfortunately the case, right, that resale certificates and other certificates, while sometimes transferable state to state, are not always. So to focus on the slide here, this is the point, right? There are multi-state options for some of this, which I'll talk about in a second, but the process is not uniform at all. It differs from state to state across every kind of exemption. And different, basically, the exemption certificates are proof of an exempt sale. That's really what they are. And states take different kinds of proof and insist on different kinds of proof for exemptions. So generally speaking, you need something in writing for starters, most states, and it's usually a prescribed kind of certificate. We've talked a bit about resale, right? So a couple of things about resale certificates. There are multi-state options that can be quite helpful. the Multi-State Tax Commission has a multi-state resale certificate that covers a wide range of states. And there are nuances from state to state you want to be careful of, but you can get one certificate from a customer that will cover a large number of states. I think the MTC form has something like 30 states on it. Similarly, the Streamlined Sales and Use Tax Agreement, which I suspect we'll talk more about, a compact among about 20, one state is sort of, there's 24 states total. One's an associate member and not really complying with regard to print issues, but 20 plus states, and it has a uniform certificate that you can use for resale and for other things I'll mention. So if you can get an SSUTA certificate and an MTC certificate, you probably have just about every state covered.
Okay,
That
and so
said-
I know that in preparing for this, I know that on your last slide, you have some links to those multi-state options. So for those on the call, stay tuned. Matthew has some resources for you to be able to access related to streamlining options, but this gets pretty complicated because first you talk about having the paperwork, the documentation, and then if that documentation works for the states for exemption, but you also have to talk about if it is for retail sale in multiple states. So you use the example of maybe the headquarters for the company you're working with is in Wisconsin, but they have locations in multiple states and you're selling the end product to them. And I'll use the example of many of our members produce retail signage that goes to retail stores. Maybe that is an eyeglass store. And it's really the destination tax rate, not the home state, even though the invoice total may be going to Wisconsin. We're really looking to collect tax in California, in Illinois, in Nevada, in Pennsylvania. And so the burden is on the seller, the printer, for tracking those rates and submitting payment of sales tax to those states, even though the invoice for printing is going to Wisconsin. Correct?
That is right. If you have Nexus in all of those states, right? You do have to have
Sure. If we trigger the
obligation.
threshold, yes.
Right. So you do want to, that's another reason to know, right? But yes, you're right. It is, if you know that, 20% of the signs are being sent to a state other than where you're invoicing, then the tax that applies is the state to which it's delivered, not the tax of the invoicing location. If you know where it's going.
And it's multi-customer. So not only are we looking for those signs for that eyeglass company, but they had maybe 20 invoices into that state that reached $50,000. And then we have several other customers who had invoices for products that went into that state that helped us get to the point where we reached a threshold. And now between several of our clients, we've triggered this need to pay sales tax, correct?
That's right. You measure your obligation based on your sales volumes, not an individual job.
Okay. But not postcards going into that state, really project-based or invoice-based, and not individual mail pieces.
Yes, the mail pieces, as Rob emphasized, are not the way you measure transactions. But as he also explained, if you have 100 pieces going into a state on a single order, that's one transaction in that state. But the dollar value associated with all 100 pieces moves you toward that threshold. So if each piece was, $10, then you're talking about $1,000 toward your threshold of 200,000 or whatever it might be in that state. So resale certificates, right? Your question, Teresa, should you have these in order? Yes, I mean, you should. And it becomes more complicated when you have multiple states where you might have an obligation. And so it does make sense to check, whether even with existing clients, you have enough, because you may have that existing client's home state resale certificate, But if that client is sending mail into 10 states, only 5 of those states may recognize that home state certificate as being the proper evidence of resale. It's really, it's sort of Byzantine, but it's the case that you do need the proper evidence. And I will second Rob's comment that sometimes you can get these things upon audit. It really is, there are rules that sometimes say you need to have it within 90 days of a sale. On audit, you can often convince an auditor that, give me some time to go get the certificates. But it does depend on the auditor frequently, and it may be very subjective to the individual person or individual state revenue department practice. So it is good to have your exemption certificate house in order. And to try to, we'll move through these other categories. Not yet the slide though, Rob, because I want to just touch on those, but that's okay, because there are other things that are important, especially in the print industry. So some of the good news for folks in the print industry, besides resale certificate availability, is exempt products. There are exemptions for promotional materials in a number of large states. So if what you're printing are promotional materials, and you can meet the state specific requirements. So sometimes those promotional materials need to be in the nature of promotional direct mail, but not always. You might be able to get a promotional materials exemption in California, New York, Pennsylvania, Ohio, if you're selling it, and some other states. And then the other good one for direct mailers is the Streamlined Sales and Use Tax Agreement has an exemption certificate for direct mail. And to be clear, the certificate, which is the same form that you would use for resale, by the way, for the resources we'll see at the end. The certificate doesn't make the product non-taxable. It makes the obligation the buyer's obligation. It relieves the seller of the obligation to collect on direct mail. And the certificate is quite clear about that. You can make your own determination about how you want to communicate to your customers this issue, but they will see a lower bill from you in streamlined sales and use tax states, and that's 20 plus states, if they're buying direct mail and they give you that direct mail certificate. So that's a very useful tool for the print side of the print industry. Exempt purchasers, we're talking about nonprofit businesses mostly there, but there could be others, of course. Some exempt purchasers you don't need a certificate for. If you're selling to the federal government, you don't need a certificate. But if you're selling to nonprofits, you do need proof that that is a nonprofit organization. And unfortunately, like these other things, really state-specific rules and no multi-state certificate. Being a 501c3 will not automatically exempt a business from sales tax in many states. So this is one where, unfortunately, then you really kind of need to put it on the customer to go and substantiate their exempt status in states where they're shipping. This one's a tough one, a tough nut to crack, but exempt purchasers is another way where you might not have to charge sales tax if you just let your customer know and say, go get the certificate you need. Last one is this direct pay option. It's not very common because only businesses of very large scale can usually get direct pay authorization. So if your customer is a very large business, they might have an authorization to pay the use tax directly and not require you to collect it from them. There's one small quirky one in Texas for direct mail. You can take a certificate that will allow a customer for Texas to self-report. But there are some obligations that are very clear in that case, that customer really does take on the obligation of reporting Texas tax. And you as a print vendor or a direct mail vendor in that case, may have to inform the comptroller who it is that has given you those certificates. So customers shouldn't take that one lightly. Another category of things where tax doesn't apply are these non-taxable transactions. And we'll get to the end here, so we'll come through these quickly. Essentially, there are 4 significant states, and 3 of them happen to be basically in the Midwest, where if you are sending direct mail and you place it in the mail outside of that state for delivery to recipients in that state, there is no taxable use occurring in the state where the recipient lives. So there being no taxable use, there is no taxable transaction. So that's Illinois, Michigan, Missouri, and the state of Virginia out east. Again, if you're mailing into those states from outside the state, giving it to the US Postal Service outside the state, then those pieces of mail won't be subject to tax. Lastly, there's this category of operational direct mail, by which I mean non-promotional. And there are a number of SSUTA states, probably half a dozen, that simply don't tax operational mail. So like bills, routine notices, things that are non-promotional in nature. That category of direct mail is not taxable in about 6 SSUTA states.
Sorry, Matt, were you done? I'm sorry.
Yeah, over to Rob. I'm sorry.
Okay.
In just
Sorry
a moment
about
there,
that.
before you move on, in that top bullet point there, I'm going to focus on Missouri because we have many members from the Kansas City market on the call. And of course, the Kansas City side of that state borders on Kansas. And so there is almost an automatic nexus between Missouri and Kansas for those that live in this area. It's not unusual for someone to live in Missouri and work in Kansas or vice versa. And in that case, if you're in Kansas and you're mailing to Missouri, are you exempt and fall under this non-taxable point, or because they automatically have kind of this overlapping city tax, kind of like the Twin Cities, are they?
So I'll say this.
Tax?
I've never confronted the specific situation. You should be exempt if you put it in the mail on the Kansas side of the border for
Okay.
mailing to the Missouri recipients. That is the rule by a case decision of was in the about 25 years ago in the state of Missouri.
Okay.
You might encounter a Missouri Department of Revenue that is resistant to that idea, right? If you are, especially if you have Missouri side of the border operations, you know, so,
Okay.
so I don't want to be cavalier about what you might encounter, but there is, technically speaking, a case law decision in Missouri that would say if you put it in the mail outside Missouri, it should not be taxable.
Okay.
All right. Fulfillment operators. Obviously, we have some people on here that do fulfillment as well. And fulfillment is a service. So that would be taxed and sourced separately and differently than the printed materials or the mailing materials. Typically, I think Matt had a slide on this near the beginning, but services are typically sourced to where they're provided. So if you are a fulfillment house in Missouri and you are packing and mailing something outside of Missouri, typically that service that you've done has still been provided in Missouri in the case of fulfillment. Important to separately state fulfillment items, as the fulfillment is, since it is a service, in most states it's not taxable. There are some states that do tax services, but for the most part, services are not going to be taxable. I think that's about all we want to touch on there.
Yeah, I think, and Rob's right, you know, separately sold services are something that are probably going to get different tax treatment. Beware that if it's on the same invoice, sometimes the state will say, well, that's part and parcel of the whole thing. So you want to look, unfortunately, we always have to say this, you want to make sure you know state-specific rules about what's included in the quote unquote sales price. But if you have an invoice that's just for fulfillment, then I think it's pretty clear that you're talking about a service, and then you look at the service rules.
Okay. How about shipping charges? You know, we fall into that same realm of, was it included in the total invoice for the product and therefore it's taxable, versus was it broken out on the invoice and is it non-taxable, and different state laws there? Do you have recommendations for shipping?
Well, and Matt, you can speak to this as well, but it's like just about all these items. I mean, Teresa, you made a comment earlier that it's complicated. And why is it complicated? Because each state can decide whether they want shipping costs to be taxed or not taxed. Some of them say if the product that's going is taxable, then it's taxable. And if the product's exempt, then it's exempt. Some of them may tax the shipping no matter what. It's just, it's all over the map. What you want to try to do when you're invoicing is you do want to try to invoice to your benefit. So if you do have a state where, and what I mean by that is, if there are separate printing and fulfillment charges, but perhaps the charges are immaterial, the printing charges are immaterial, you know, perhaps you can get away without having to charge any tax. It gets back to my favorite tax response that clients always love to hear. It depends.
Yeah, okay.
Totally right. The shipping issue, Rob's point earlier about separately stating, very important for shipping. If you want to be exempt for your shipping charges, you better separately state them. It won't always make them exempt. There are many states where the state measure of the sales price doesn't matter whether or not you separately state the shipping. But if you want to be able to exempt shipping from sales tax, it does need to be separately stated in almost every state. There's a couple where if you have records to back it up, you can get the non-taxable treatment. But and the one other thing that you want to pay attention to at least in the direct mail part of the print industry, is that there are specific rules about the treatment of shipping charges for direct mail in a number of states. The SSUTA states have the right to set different rules. So they don't always have different rules, but they may have different rules for direct mail than they do for non-direct mail products. And the last thing to mention is that postage sometimes gets treated differently from a common carrier charge. So you also want to pay attention to that aspect of how you're delivering to your customers.
Okay, so there are two questions in the Q&A specifically about postage being taxable in certain states and not others, and if the postage is on a tangible item that is taxable. And I think what I hear you saying is it depends.
It does depend. Postage may be taxable or it may not be taxable. It's taxable in fewer places than non-postage, but there are states that do impose tax on postage. The old rule, and this is a very old rule, that would have said, oh, wait a minute, if you're taxing postage, you're taxing the federal government. No state really accepts that anymore. Postage is a potentially taxable portion of a sales price, regardless of the fact that it's postage. But there are more states that will exempt postage than will exempt other types of shipping.
Okay. We have a question saying, how can you find out if freight is taxable in a state? And is that some of the links that you have on that next slide?
Oh. Yeah, I mean,
So,
most states will have, well, I was just going to say, most states, I mean, what you're going to want to probably do is go to their Department of Revenue website. Most states have decent resources on there that will let you know. The other way is to ask a professional. Yet another way is to call the state. I mean, in Minnesota here, I think we have a pretty good website. I think they have quite a few resources that are quite helpful. But there have been instances where I've just decided I'm just going to call them and ask them a question. And I think most states, again, sales and use tax is complicated. For that reason, you want to try to get this as correct as you can, knowing that it's probably almost impossible to be 100% compliant and correct on everything when it comes to sales tax, because the laws are so complicated. And because of that, you're more likely to be audited. And I guess I'm getting on this tangent just because I think your states want you to get things right. So I think they're willing to, that's why they have good information on their websites for the most part. And they would probably welcome phone calls or emails. And again, if you're not comfortable having the email come directly from your company, I've had a lot of clients where I've sent emails on their behalf as well. So,
yeah, just going to mention when we do that, we never disclose the company's name.
No.
Yeah.
There are some of the large third-party providers like Avalara, TaxJar have collected state treatment of things like shipping charges, so you can sometimes find that. You do want to double check it. There can be errors in it, right? It's not really legal advice, and it's just, you found it on the internet from a reputable source, but you want to be sure that you understand whether that's right. Now, we don't have any of those on the resources page here that Rob is showing. You could go to that Streamlined Sales Tax Governing Board homepage, and there is a way to find out an individual state's treatment of shipping and handling charges, both on direct mail and on non-direct mail retail sales. But it does require some digging. You do kind of need to know where to look. So it's not something that we could even really walk you through during the call here, but it's that is a very reliable source of information for state treatment of shipping and handling or postage, but hard to find for the layperson.
Okay, and so I'll just remind those that may have joined us late, you're going to receive copies of these slides. So it's not necessary for you to try and write down those URLs that are very long and detailed. But I'd also just take that conversation we're having one step further, and we're talking about tangible product being shipped into another state. And if we meet the threshold, we would be required to pay sales tax into that state on that tangible product. And that may also include shipping charges and postage, correct?
It could, depending on the state's measure of the taxable sale. Whether or not the measure of sales price, as it almost always is, includes shipping and related services, for example.
Correct. Okay. There's a question that everyone will receive a link to the recording, a PDF of the slides, and the Excel file that Rob shared earlier. So that's correct. There is a detailed question about whether there's movement on consolidating multi-sales tax ruling to be more standardized. It's so complex. And of course, the burden is on the small business to comply. It's certainly difficult, and the cost is mounting. So where are we on anything consolidating multi-state sales tax rules?
Yeah, we'll let Matt. I know I asked Matt this question the other day because I figured he was a little more plugged in on this than me, and I kind of expressed the same concern. So I'll let Matt take this one.
Thanks, Rob. So the short answer is not really. On the good news side, before I get to the bad news side, Streamlined Sales and Use Tax Agreement, of which 20 plus states are members, has uniform rules that they have to adopt in order to be part of that agreement. So that contributes some level of uniformity. And there are many streamlined states that are in the Midwest. So, it's by far the most represented region. So Arkansas, Indiana, Iowa, Kansas, reaching a little bit Kentucky, Michigan, Minnesota, Nebraska, North Dakota, Ohio, Oklahoma, South Dakota, Wisconsin are all SSUTA members. So there is some uniformity of treatment. And as I mentioned, the SSUTA has special rules for direct mail. So that can be helpful in at least helping you to understand obligations. For example, the exemption certificate for direct mail, if you get that and your customer base happens to be all across the Midwest, you may well have found yourself a substantial reduction in your compliance obligations. If you can get all your customers to provide those certificates, you can really reduce your compliance burden, and you can reduce their bills. They still do have an obligation to report the tax. So the SSUTA is the good news, I suppose, in terms of uniformity. There are a couple of movements to unify some local tax jurisdictions. So I don't know that this is helpful because it means you're collecting or obligated to collect in more places, but at least they're trying to unify. Rob mentioned Alaska a couple of times as an example state, and that's a place where you're talking about only local taxes and they have a central authority in Alaska for reporting that. Now, you may not have many Alaska customers on the call, but Colorado is trying to get a system. Colorado is a nightmare of local jurisdiction compliance, and there's a system, at least a portal, to try to unify that. That said, there is no national simplification on the horizon that I am aware of. The states feel as though they won the issue in Wayfair, and they would violently oppose any kind of effort by Congress to simplify sales and use tax systems across the nation. Congress has the authority to do it. Congress can set the rules for interstate commerce under the Constitution, but states will oppose it. You might even find some very large players in different industries who now, in a sense, have an advantage because they can comply. I'm thinking specifically of a company like Amazon, which switched sides several years ago in this debate. So the forces lined up against uniformity at the federal level are pretty strong. And at least right now, I haven't seen a groundswell of support that makes me think a bill would get through Congress.
Okay, there's a question in the Q&A about how efficient this can be done in a reasonable way. And really, if we look at mailing or shipping, and they had items going into the 46 different states, jurisdictions, they could be potentially collecting sales tax with line items of 46 different potential areas. That would be worst case scenario. Or is there more potential that this would go into local municipalities and counties? And I mean, what's the chance that it would go that far? Many of our cities have sales tax, and today it's just a state concern. What are your thoughts there?
Yeah.
So
well,
most, yeah, go
go
ahead,
ahead.
Rob. Please, no, go ahead.
I was just going to say, I mean, the first thing to remember is that you'd have to have Nexus in all 46 of those states. So, as Matt alluded to in his previous answer, if you're a big player, you may have the resources to be able to do that in a fairly streamlined process. If you're a much smaller business, the first thing to remember is that you'd have to have Nexus in all 46 of those states. If you did, then unfortunately the rule would be that yes, you could have an obligation to collect in all of those and as well as in the jurisdictions below.
Good news for the locals, and I don't want to soft pedal it because there's bad news too, but good news is that most local jurisdictions are state administered. So you are talking about only filing one return. You may have, those 60 line items in that return mentioning each specific jurisdiction. Rob nods his head. I know you look at the Minnesota return and you see dozens and dozens of jurisdictions where you might have to fill something in. The home rule states are fewer, right? Alaska, Colorado, Alabama, Louisiana. And some of those states do have ways of reporting local taxes through the state. I believe Alabama does. Louisiana's voters just rejected in a referendum a simplified system for local taxes in November. Just in this past election, they just voted it down. An effort to get some simplification there. But you're probably talking about the way to simplify after you've done what Rob rightly reminds everyone, you've got to look for your Nexus first. You may need that third-party provider. That is the way of tackling the complexity. Unfortunately, if you've got enough states and enough local jurisdictions involved, it's kind of a third-party game unless you were ready to devote a lot of internal resources.
Okay, there's a comment that they have a salesperson who moved across the border to Wisconsin and asking if that means they have Nexus. And this is not employment tax that we're talking about. This is sales tax. So it really has not to do with where that salesperson resides, but how much you're selling into Wisconsin and if you've met the threshold for the number of transactions or the total dollar amount, correct?
So old physical presence rules don't apply to residency alone, right? So somebody can live across the border if they work in Minnesota but live in Wisconsin. Then they're not creating Nexus. But if they're working in Wisconsin, they might create Nexus. Probably they do, depending on what they're doing. Work from home, that's kind of a vague, difficult, challenging area. Commuting. I mean, most states think if you allow someone to telecommute that they're basically working for you from that state where they're telecommuting from. But, we all saw all the headlines of COVID. There was a lot of discussion about what it means to have employees in a state. But if they're working in the state for you, they might give you Nexus that way. If all they do is live there, then Teresa, you're absolutely right. Then you're just looking to see what are your sales volumes in that.
But if they open an office there and they have a physical presence, then of course they have Nexus, correct?
Yeah.
As a business.
Yes, and without regard to your sales levels, honestly. Once you have physical presence, you don't, there's an argument you could make, but most states are going to say, no, you have physical presence. I don't care if you've only sold $80,000 into our state. We still think you have an obligation if you have that office there.
Okay.
And that kind of brings up an issue that, and I know that's maybe not part of this, but just something to bring up. One other reason why you might want to be in compliance in certain states is if you never file and never get in compliance, there is no statute of limitations. I guess that question kind of triggered that. So if you had somebody that had an office in Wisconsin and let's say you only had $30,000 of sales to Wisconsin, so you decide, well, I never really want to file there. In theory, somebody could come audit 10 or 12 years later and go back and collect 10 or 12 years worth of sales tax. Whereas if you filed the return, and maybe even if you made a mistake on the return, but you've been filing those returns, as long as it wasn't a material mistake, they'd only have 3 or maybe 4 years to go back on you.
Okay. If you're a wholesale manufacturer, technically you don't sell to the retailer, the end user. Are you completely exempt from these concerns?
You need to get the certificates of, the resale certificates from your intermediary customer. So if you're a wholesaler selling to a party that then sells to the end user retailer, just make sure you get the resale certificates. And I say that because all sales are presumed to be retail sales until it is demonstrated otherwise by a resale certificate. So get those. Rob's point earlier in his template, a good one. Sometimes the state measure of the threshold is retail sales. Now, many states measure based on gross sales. So you may still need to examine your obligations if you're strictly a wholesaler and you're selling into a state and you have gross sales above a certain level. You want to check. Many states will say, no, you don't need to register. I had reason to look at that recently, and many don't require it. But the thresholds differ. Gross sales, you'd want to check. Retail sales, you're in good shape, but get those resale certificates. Some states even measure it by taxable sales. So if you also have exempt customers, you may have a way of bumping yourself below the threshold and avoiding these obligations altogether.
Okay. And just to confirm, if they have an exempt customer, but they're shipping into multiple states, they need exempt certificates for each of those states for that customer, correct?
Yes.
Okay. Okay. So it does seem like there is a great burden, particularly on small business, not only to register in every state that they may meet the threshold on, but they have to keep track of those, not only exempt certificates, but exempt products, as well as then collect tax for those states where they weren't exempt and file tax in those states. And that's really their responsibility, correct?
If they have Nexus
If they
and
have
they haven't figured out a way that, through the measure, if the measure is retail sales, for example, get those resale certificates. If the measure is taxable sales, get all those exemption certificates. There may be ways that you can basically just dot your I's and cross your T's and not end up with as broad a footprint of tax compliance obligations.
Okay, if we flip it on that, we're a wholesaler. If we're a retailer and we need to provide exemption certificates, it is everywhere that the company we're buying from may need to have Nexus, correct? Not everywhere that we would have Nexus, but where we're asking them to deliver to, that company's Nexus level, who we're buying from.
Yeah,
Correct? That's complicated.
that is complicated, but yeah, that would be correct, because I think Matt touched on this earlier. Basically, things are either taxable or not taxable where they're delivered. So if we're a retailer and we're having things delivered to multiple jurisdictions, and for some reason we have exemptions in those jurisdictions, then we would need exemptions for each one of those jurisdictions.
Where we're asking them to send it to. Okay.
Yes.
Yeah, basically we'd be providing an exemption for each one of those jurisdictions to the seller,
Okay.
or to our vendor.
Let's talk a little bit about these survey letters that some of our members have received from certain states, where it looks like they're digging for information and some members don't know how to handle that. Do they take that seriously? Should they reply with as much information as possible? Are they trying to protect themselves? Is it just an inquiry that they don't need to respond to? What are your thoughts on these survey letters they're getting?
I can go first, Matt, and then you go ahead and chime in. I mean, there's something that should be taken seriously. And something you probably, unless you feel internally that you've got people that are qualified to do so, something that you probably want to run by your CPA or your attorney after you have it completed, to make sure that you've got it completed to the best of your ability.
Wholeheartedly second what Rob had to say. Take them seriously. Sometimes they're more pointed than in other cases, but they're always something to take seriously, because you don't want to be cavalier about filling one out and then find out that the next thing you get is a notice of assessment.
And are they getting those because a state feels that they may owe tax to their state?
Yeah.
So sometimes they're phishing letters. Sometimes they're not. Sometimes they might have come from an audit lead from one of your customers in that state, for example, but sometimes they are phishing letters. And there are, if you get a letter from a very tiny town in the state of Colorado, for example, that's probably a phishing letter. But still take it seriously to make sure you look at it. But it really does depend on the instance. So it could be nothing, or it could be something to really pay careful attention to, but always take them seriously.
Okay, definitely need to get another set of eyes to look at it to make sure that you're evaluating it correctly. Is there a precedent for inconsistent Nexus? Several years you don't have Nexus in a state, then 1 year you do a lot of work for a customer in that state, and then you go back to not having Nexus in that state. Any precedent been set there?
So you are constantly measuring your Nexus based on your current or prior calendar year. So if you have a big year, if you cross it during the year, cross the threshold, let's say the threshold is 100,000. And for years, you've only sold $65,000, but you have a big year and you sell 125,000 and you make it there by October 1st. Theoretically, you are then, once you cross the threshold, you have an obligation for that current year to begin. So you collect for the rest of that year. That prior year is now going to carry over to the next year. So you're going to have Nexus for the full next year based on that $125,000 year. Even if your sales go back down to 65, you still have Nexus. But when you now reevaluate your 65 for that current year, you've come back to your regular level, then you no longer have economic Nexus for the year after. And you can deregister if that's what you want to do, if that makes the most sense for you. So yes, you can go back and forth. And when you're looking historically in the way that Rob has encouraged everyone to do with the template, you know, if you had Nexus in 2019 and then you didn't in 2020, but now you're looking at it in 2021, that'll be a factor you're putting into the hopper and trying to figure out, what am I going to do about these past periods? You know, I had Nexus, now I don't. You know, how should I handle that? You'll want to talk to your advisors about that and evaluate your options and your risks and that kind of thing.
Okay, I know that we had an interesting conversation on those that are responsible and comply, maybe being at a competitive disadvantage to those that choose not to recognize or act on their obligation to comply. And therefore, one organization may have what looks like higher pricing because of the cost to put in the systems to manage this. The third-party software, they may have to hire an accounting person. There are operational costs that make it more expensive to run their business. So their overall cost will probably be passed on to the customer. Their hourly rates may need to increase. Any regard for your thoughts there?
Rob, I thought you gave a really good answer before. Why don't you reprise that and add a little if you've got more, and I'll jump in.
Sure. Yeah, I mean, it really comes down to your business risk tolerance. And I guess if you're that company that's in compliance, knowing that you're probably going to be there for the long run, and as things come up in the future related to economic nexus, that company that's not compliant is at risk for being reported by, you know, maybe it could have been an audit that comes up because, as Matt said, they were at somebody else that was related to that company. It's just, it all comes down to a business decision, and that's why you want to use, I think you want to use that tool that we have. You want to try to determine what your obligations are so that you can see that you have a material risk or not, because maybe that company that's not complying, maybe they're not complying because it's not a material risk, you know, to them. Maybe, and when I say material, they're looking at the dollars overall and thinking that it's not something that is going to affect their business in a detrimental way if they're audited. But for the most part, if you're doing things the right way, you should know that means that you're going to be there for the long run. And I'm not here to say, just so I'm clear, when I say doing things the right way, I mean doing things the right way for your business. I'll give clients advice, and I'm sure Matt would second this. And I'm not offended if they don't take my advice, because I think I've had instances with clients where we've used the tool, we looked at what the liabilities are, and you know, we've kind of said, all right, on the flip side, let's see what the cost of compliance is. Let's see what it does cost to get that third-party software to help us do it. And if the cost is more, you know, a lot of times it'll be okay. I don't think we're at that point yet where we want to be there. So there is no right or wrong answer, unfortunately. It's just, it comes down to everybody's in business. Everybody that's in business has some risk, and how much risk are you willing to tolerate? And that person that's not complying is obviously decided they can tolerate more risk for some reason or another.
Good answer.
I agree with Rob entirely on the idea that he and I both, I think, probably view ourselves as being advisors that tell you what your relative risks of different options are, so that you can make the business decisions that you need to make for your company. I mean, we're here to let you know what the rules are, what the risks are, both in terms of strict legal evaluation and then also much more practical considerations about things like, the likelihood that you'll be discovered. Do you think that business level is going to continue in that way? All the kinds of factors that you put into the hopper to try to help you make a good business decision. We're not here to make your business decisions. We're here to help you understand the pros and the cons.
Yeah. Just one more thing, Teresa, earlier you asked about the landscape, and I said that I asked Matt about that the other day, and I did because just so you know, and I'm guessing Matt's probably with me. I mean, $100,000 isn't a lot of sales. There is a lot of, they are making this rather onerous on small businesses. So I kind of got off on a tangent after I asked Matt that question about how, I mean, if you're a $5 or $6 million printer, to try to comply with all this is really costly. And I know and agree with that. So I'm on those people's side. It's just, at the end of the day, the facts are the facts, and we just need to pull everything together and decide what makes most sense for that business. So
I would just tag on to what Matthew and Robert are saying there. We do certainly want to keep everybody out of that category. I think you called it earlier, Matthew, the material misrepresentation bucket. And so we try to keep you out of that area. Otherwise you could get in trouble with authorities.
Certainly. There's been some comments that because of this burden on small business and that small business shoulders much of the economy today, is all of this burden stifling economic growth? Any thoughts there?
Well, we represented the retail industry, including the print industry indirectly, right, in the Wayfair case. And we argued strenuously to the United States Supreme Court that the crazy quilt of varying state and local tax requirements imposes an undue burden on businesses to comply. And, I realize that it's a little bit like the old childhood joke about horseshoes and hand grenades.
Right.
Close isn't good enough, right? So it was a 5-4 decision in the court. The court, in the opinion, Justice Kennedy said, it's still the case that traditional rules of Commerce Clause apply. So if you can demonstrate an undue burden, then you have the ability to limit this kind of an obligation. What the court knocked out was the physical presence sort of shorthand way of understanding your obligations. Does it stifle business? I think it's certainly a cost that small businesses bear, that as a policy matter, we might really question whether it's good policy. And we wish that there had been a congressional solution rather than a solution before the United States Supreme Court. Unfortunately, that it just doesn't seem that there's the momentum to get there.
I think Matt, your comment was to me that Congress has lots of other things to worry about right now, and I think that was definitely a fair comment. The other thing is too, I mean, this is fairly new, so who knows? Maybe there will be small business coalitions that, I mean, again, this is total speculation, but I mean, you get a few years down the road and some of these states start getting a little more aggressive. Maybe some small business coalitions will form and be petitioning their Congress people to, get some momentum for some kind of uniformity. I mean, who knows? But it's, it has been 3 years, but I think in the sales and use tax world, that's still relatively new.
Just so this isn't all kind of a gloom and doom bad news story. One of the things to recognize about that streamlined sales and use tax direct mail exemption, for example, is that it was a recognition by at least that group of states that the area of direct mail is particularly complicated because you have so many individual jurisdictions where a single order is delivered. And it was the recognition of those states that said, well, that's really a burden on a seller to have to make them determine the tax in every one of the thousands of different places that mail might go. And we're going to give them the opportunity to shift that obligation to their buyer. The one that is using those materials is the one that actually, you know, eventually gets the benefit of that direct mail by using this exemption certificate to relieve the sellers of the obligation. And then there are those, you know, promotional materials exemptions and things. One of the things that I like to remind folks is just that there are opportunities in this industry that some other retail industries don't have. They just don't have the exemptions that are available. Now, granted, they don't have some of the complexity, so they may not merit the exemptions in the same way. But there are some opportunities out there, and you need to know about them. You know, you need to know about those non-tax jurisdictions we talked about, the Illinois and Michigan, and for, you know, putting it in the mail outside the state and things like that. You put it all together, you got some things that you can do to help control your responsibility.
Absolutely. And at the end of the day, it is the buyer that pays the sales tax, but putting the process in place and complying and collecting it belongs to the company that's selling it. And those are our printers that are on the call today. So much better to be informed and knowledgeable about where they need to go to work and put processes in place. And this information was extremely valuable. We have just a few minutes left before we meet the top of the hour. Any last comments or suggestions that you have for those that are on the call today?
I mean, mine would just be, I mean, you know, again, we'll send this tool out. And again, it's free. So I'm not pushing that you need to talk to me or Matthew or anybody about it, but I'm just, you know, figure out what you've got. Maybe you don't have any issues. Just take a little bit of time to determine what you may have for issues out there is all I would say. I mean, just, it's just good business sense to know if you have anything lurking, and, you know, maybe you can find out that you don't have anything lurking, and you listen to this, you maybe learned a few things, but you can forget about them because you don't have any issues right now, and then measure again next year.
Totally. I was second what Rob had to say. You know, understand your obligations. You can't make smart decisions about how to deal with them until you understand what those obligations are, where those risks lie, the kinds of things that, you know, what we're trying to do is alert you to and could help you with. In addition to Rob's tool, I think you're circulating sort of a 2-pager that I provided that gives you some sort of maybe thoughts on best practices. And, you know, don't ignore the problem. You can, in a relatively reasonable amount of time, figure out where you stand, and then you can decide, you know, what do I need to do? What are the decisions that are right for my business?
Excellent. Rick, any comments that you want to make?
No, just on behalf of the Financial Executive Council of PIM and PIA Mid-America, I think Matthew and Rob have done a great job. Not answering everybody's questions, of course, but just giving us a good grasp of the landscape and on a tough issue, and it affects this industry. So thanks a lot, guys. Appreciate it.
Absolutely. I know that you included your contact information on the second to the last slide, and we will share that with those who are on the call. Your expertise and willingness to guide our industry leaders is priceless. Thank you so much for your time and the effort that you put into preparing this. Matthew, I know you indicated that you did provide a 2-pager. We sent that to members to kind of get them thinking about what questions they would want to ask, and we'll include that again in the package that we send them with the recording. So thank you for putting that together.
It's my pleasure. It's my pleasure joining Rob for this discussion. It's interesting, and I've had a good time.
Yeah, no, Matt, I really appreciated working with you on this.
Thank you again. Again, complicated, but not something that we're not up to the challenge to tackle. It looks like we might have one last question or comment. Just thank you very much and very informative. So everyone have a great afternoon. Give us a day or so to prepare the information to get it out to you, and we'll send it out to all those that joined us. Have a great afternoon. Thank you and bye-bye.